Hello and welcome to this Business Today Market Special. I'm Udayan Mukherjee. With me as always is Abha Bakaya and our market guest for today, an old-timer on Dalal Street, Vijay Kedia, Managing Director of Kedia Securities. Vijay, pleasure to have you on the show. How have you read the market over the last few weeks? Because we've had a pullback from the Ukraine scare. But from here on, do you think it's a phase of consolidation and correction that the market's going through, or do you think something has fundamentally changed after the big up move of last year?
Okay, good morning or good afternoon, whatever, Uday and Ava. I will tell you, according to me, according to my limited knowledge, I think there has been a major structural change in Indian capital market. And it has happened after 2003. If you will notice that before 2003, all the bear markets were longer and bull markets were very short, were shorter compared to the bear market. Now in 2003, I think first time in the history it has happened that bull market lasted for pretty 4-5 years, and the bear market lasted not more than 9 months. And before that, it used to happen in just in opposite way. No bull market ever lasted more than 9 months, or no bear market ever lasted less than 9 months. In 2000, after 2003 and 7 or 8, bull market was for 5 years, and bear market was over within 9 months. So, and the same thing has happened in 2020. And remember that 2007, 2008 bear market, 2003 to 7 bull market was mother of all the bull market. I always say that mother of all the bull markets are always followed by mother of all the bear markets. Same thing happened in 2008. Same thing happened in 2020. Again, the mother of all this, or a father of all this bull market started, and it ended with father of all the bear market in form of COVID and all. But indexed from high to low, was made within 9 months, and index just turned around from there to never to touch it again. So this is what I feel, that there has been a total structural shift in this market. And somehow I think that this market is actually counting a table of 21. First top was 21,000, second top was 42,000. Now it was around 63,000. Maybe next top will be somewhere around 84,000 or something. So I think there is a complete shift, fundamental shift in structure.
Where are we now, Vijay? But do you think we'll start making new highs sometime in 2022 again, or do you see this process of the broader market consolidation? I'm not talking about the Nifty and the Sensex, but many mid caps, smaller, large caps have corrected between 20 and 30%, some even more. Do you think this process is coming to an end and we'll start seeing new highs again, or do you see this phase lasting longer?
You see, I think according to me, this bull market or bull phase or bull run, whatever you call it, it had ended in 2021, September or October, somewhere around. That time, index had made all-time high. And after that, it consolidated, it fell down. And I think during this March 22, whatever index had touched, whatever bottom index had made, I think according to me, that is the bottom. And forget about the index. I have said this number of times, this index is very deceptive. I am investor in a mid cap, and I feel that all these mid caps are going to show a new high before the index shows. So this is what my perception. All my investments are, made in this theory only.
Okay. Let me ask you about something else, Vijay. Forget about the index. But as an individual investor, one major theme that you must be grappling with right now is the kind of rise in commodity prices that we're seeing over the last few months. I mean, as a professional investor, how have you incorporated that into your own investment philosophy and strategy?
See, so far, I have understood all my investments. Till date, none of my investments are having a negative impact because of the rise in the commodity price. I think, so that is why I am not much bothered. And so far commodity is concerned, I feel that this boom in commodity is going to remain here for many more years to come. And so this is what my strategy is this. And I am still staying invested.
Vijay, broader markets have surprised somewhat of late. We expected sluggishness to continue there, but perhaps the market is seeing some value given that they're not looking as steep vis-a-vis some of their larger peers. What's your sense, and are you also cherry picking in the broader markets?
Actually, I can't cherry pick because I have already picked all my cherries. I am 100% invested in this market. So whatever market is giving an opportunity or market is falling and rising, I am just like a spectator. I am just watching this game, and I don't have liquidity to invest further. And I am comfortable in all my whatever investments I have made. More or less, I am comfortable. So I'm just watching them.
Vijay, as an old-time investor, how have you approached this massive correction in the newly listed digital stocks? Because they listed somewhere and then they took off, and the correction was equally brutal. Do you feel that these stocks have corrected enough now in this fall, or do you still find difficult to justify the kind of valuations they trade at?
Just from a technical point of view, I think maybe they must have touched their or they have made their bottom. But I am not an investor in any of such shares because it doesn't give me peace of mind where there is no predictability. I cannot invest in such shares. But at the same time, I am invested in many technology or few technology companies which are old and listed. So I'm happy there, and I'm not looking to invest in all these companies like Paytm or Zomato or at any price.
So let me ask you about another industry, which is not quite commodities, but somewhat linked to it. The whole food processing and beverage industry. I think you may have some investments there, or because there are a large number of mid-cap and small-cap companies there. What is your approach to that space now?
Again, I do not have any view. Of course, in a rising economy, all the sectors should do well. They will also do well. So I do not have any investment in food and processing industry. I have some investment in specialty chemicals and some telecom product companies and travel and tourism and all. But in particular, I do not have any investment in food processing industry.
All right. Vijay, what would you recommend? I know you're fully invested, but for a retail investor who's perhaps just got into this market before it's starting to look shaky and they're wondering whether that recession is going to hit, how would you advise them to balance their portfolio at a time like this?
I think I always advise new investors who are coming for the first time into this market that they should invest through mutual fund. They shouldn't try investing directly into this market. Market is very risky. And a lot of people every time when they come, whatever I interact with, they're asking me then where should I bring their capital. So just to get some capital, they want to invest, they want to go for trading and all. So I always tell them that that's a very risky way to create money in this market. And I have tweeted also many times that there are two ways one can create capital into this market, either through trading, but chances of getting success is 1% and failure is 99%. And second ways to get capital is to be frugal in your daily life, where chances of being successful is 99% and failure is 1%. So I think any new investors should follow this and invest through mutual fund.
You mentioned tourism, Vijay. Let me ask you about that space, hotels in particular, and even some of the retail stocks. What makes you optimistic about them? Because in the past, the one criticism against this space is that while periodically they'll give you rallies, over a long period of time, because their return on equities are usually not great, they have not created great wealth for shareholders. Why do you think this time is different? Or are you just playing it as a bounce back trade as tourism comes back post-COVID?
I will tell you, I have invested in Mahindra Holidays. That's a disclosure and disclaimer. That's not a recommendation. And I invested in this company years back, and now I increased my holding into Mahindra Holidays last year, for the simple matter that even during the crisis of COVID, the company made a cash profit. So they have a different model, as you know, it is totally different than all these hotels company and all. So their membership fee-based income they are generating. So what you are saying, actually, it's not applicable to Mahindra Holidays.
Okay. You also said specialty chemicals. That's a wide basket. Which part of the specialty chemicals industry excites you with your suitable disclosures? Could you tell us why you're optimistic on these companies? Because some of them have expanded valuation significantly over the last 3 years.
Yeah, so I will tell you in 2014, somewhere around 2014, I had invested in Sudarshan Chemical, and that is the only chemical stocks or specialty chemical pigment stocks I am holding in my portfolio. And after from 2014 to 2019, the stock went up 10 times or 12 times from where I had bought. And in last 2 3 years, stock did nothing. I think their expansion is going to be over in next 1.5 and 2 years. So that is why company was not able to generate adequate profit. And in a general specialty chemical market also, I think that first phase of that bull run in specialty chemical is over, because other chemical stocks, all good companies have gone up by 5 times and 10 times in last 2 3 years. So I think now the company, all this sector is consolidating, and before the new bull run will start.
Vijay, what are you making of the geopolitical risks in the market, the way this may play out on the import-export sector as well? How would you position yourselves there? Again, even if it's just in terms of, kind of guidance you'd like to share with some of our newer investors, in terms of how you see things playing out.
See, I'll tell you, ever since I am in this market, I am facing this geopolitical risk. America is every time in war. In last 30 years, they have fought 13 wars and spent $13 trillion. This is what I tweeted also a few days back. So the problem is this: when there is a strong country fighting a war with a weak country, I think that's not a big issue. The problem arises when a strong country fights with a strong country. So there is a song I have written. I will just recite few lines for you. That कभी मैक्रो, कभी माइक्रो, कभी स्लो डाउन, कभी स्केल, कभी यूएस, कभी चाइना, कभी झगड़ा, कभी मेल, प्रॉब्लम के है कई नाम यहाँ, जरा हटके, जरा बचके, शॉर्ट टर्म में मेरी जान. So I am following the same thing. Yes. So as a long-term investor, you shouldn't worry about it. All these geopolitical risks will always be there. Sometime US is playing the game, sometime Russia is playing the game. So I am not, none of my investments, actually, I don't change my investments easily because of all these issues and all. They come and they go until unless, of course, it turned into some kind of nuclear war or something happens, then we will not be left to see our portfolio also. So that is all right. So I think that's an opportunity. Every time, whenever this kind of scenario has come, it has always given an opportunity for to investors.
Vijay, you spoke about telecom equipment. I think you're a significant investor in Tejas Networks, if I'm not mistaken. That stock has had an up and down run. I mean, it had a big down phase, and of late it's been doing really well. Give us the rationale on why you would be optimistic on that name.
So I had invested in this company in 2019 in a meaningful way, or 19 or 20, I think in 20, in a meaningful during the COVID. So they are catering to telecom companies, and all these telecom companies were under pressure for last 5, 7, 8 years, as we all know. And that is why company was also under pressure. And suddenly after 2020, government also got up, and those telecom companies' balance sheet also started, making adequate profit to invest in telecom sector. And this company is catering, they are into fiber network and 3G, 4G, and now 5G. So now even every company wants to, from 2G got into 4G, and now 4G into 5G. So I think, according to me, and they should be having a good 5-10 years. Now, as you know, that Tata has taken over this company. Now Tata is the hem of the affair, and Tata, TCS, and all these combined can create according to me, I may be biased, I may be wrong. And again, it's a disclaimer and disclosure that I have vested interest in this company. But according to me, they should do well. There is a quote of mine, Udayan: stay in a sunrise industry at any cost, stay out of a sunset industry at any cost. I feel this telecom equipment and the telecom is a sunset industry. So I have to be there at any cost. Doesn't matter whether P is high or valuation is high, or they don't make profit for 1 quarter, 2 quarters, or for 1 year. As long as the structure, broader picture is bright, I would remain invested.
Okay. I heard you say that you are an investor in many small and mid-cap IT companies. Which parts of the IT chain are you invested in? And if you could take us through the names and why you're bullish on these.
No, one this telecom technology company, what I meant was Tejas only. Another company I've invested, that is Ramco Systems. Again, it's a disclosure and vested interest I have in this company. I had again bought in 2020 during the COVID time, and stocks did well. But after that, it went up from 60 rupees, it went up to 700, 800 rupees, and again fell back to 400 rupees. So they are still struggling. But I think the future for telecom, for this technology product company in India is very bright. For the simple matter, what I have learned, what I have read, that all these technology product companies in abroad or in mainly in the USA are selling at 10 times, 15 times, or even 20 times their revenue. So in that metrics, Ramco Systems very cheap, but somehow companies making losses and not doing well. So maybe it may not perform for next maybe 3 months or 6 months or 9 months, I don't know. But overall long-term picture, I think all these kind of companies are having a bright future.
All right. Vijay, give us an example, and I'm not going to see this as you promoting any stock or suggesting a buy on any stock, so I'll do all the disclaimers beforehand. But you know, you have a varied portfolio, and we've been hearing a lot of reports of you know, certain investors who've really seen manifold returns across some of their investments. Would you like to highlight you know, a particular stock that has worked for you, or a story that's worked for you, and perhaps more than the stock itself, what your thinking was behind it when you first invested, and how it's now led to you know, fantastic returns?
Mane, you mean some particular company?
Yeah.
You want me to talk?
Yes.
Yeah, so one example I gave to you about Tejas. I was following this company for last 5-6 years, and company was not doing well. So I was just waiting for the turnaround point or inflection point where the sector will start making profit, so that they can invest in the product and telecom can serve them. Similarly, I had bought Sudarshan Chemical in 2014 when all the chemical companies were not doing well. And I was in China, I remember, and I was meeting people, and I realized that maybe future for chemical companies in India is on the verge of, it's on the revival phase, and maybe China may lose some grip to India. So, and I was following Sudarshan Chemical for last 10 years. So this is what I usually do. I was following Wevo Global for 6-7 years before I bought in 2014, 6-7 or 8 years. So this is what I do. I just, if I like the management, if I like the product, if I don't like the current balance sheet, I just put it on my radar, and I just keeping a track on the company and waiting to find that bottom of that you know. So that bottom, this is what I am doing. And when I feel that now the time has come, so I invest. I may go wrong also, but this is what I am following.
Vijay, one question on a part of the market which is actually underperformed, and it's probably the segment which is most overowned by many large investors and small investors, which is the banking and financial services. What are your thoughts on that space? Do you think it's a good time to be accumulating these names, or do you see the underperformance continuing? Do you have exposure to financial stocks as a group in your portfolio at all?
So I will tell you, first of all, I'm managing my own money. So I don't have any compulsion to invest in each and every sector. So that liberty I have, and I have limited money. And I like to buy a big chunk of shares in one single company. So I don't have to, unnecessary, I have to diversify. But recently I've invested in two banks, okay, and both are PSUs banks. I've invested in them, thinking that maybe this is what the news report I read every day, that whatever provisions they had to made, it has already been made, and now maybe some add back will happen or not. But that is my transitory investments. Currently, they are, of course, they are doing good for me, but that transitory investment, the moment I will get some another idea, some technology company or something, so I may sell and switch over to them.
Okay. Vijay, good talking to you today, and thank you very much for sharing so many ideas from your portfolio. Wish you great luck for 2022, and thank you very much again.
Thank you. Thank you, both of you.
If you like the video, do like, comment, share and subscribe.